Hi, it's Larry Gaines from Options on the Open. I started Options on the Open to basically help individuals generate greater income from their investment capital with less risk exposure. We developed this site into basically a day trading, swing trading site where we utilize options to take advantage of price movement. In order to do this, I developed a unique, highly accurate price cycle trading system that is known as the power cycle trading model. Now, this particular trading model gives a trader or an investor the ability to get in at the beginning of a trend rather than the end of a trend. So at Options on the Open, we utilize this trading system, for day trading, but I wanted to point out in this video that this system works across all asset classes and all time frames. And so what I thought I would do is just go through 5 different major asset classes and show you the macro trend and the long-term trend. And in this particular video, I will not even get into the shorter term trend or the intraday trends that we trade, but this particular system works, like I said, across all assets and time frames. So the first asset class I put up here is the S&P 500. This is the SPX Cash 500, and the macro trend, I use the monthly time frame for a macro, and I use a weekly for a long term. Now, the power cycle trading model actually went short the S&P 500 back in June last year, end of June of 2011, and caught this top of the market and had this move all the way down to the bottom, and it just turned back to the upside, and now the trend is back up, and the macro trend turned up right here in December, the end of December 2011. So that's the macro trend. The macro trend's up. Now the long-term trend measured by the weekly, it was turned down in July 29th, right about the same time, and it turned up in October, and it is still up. Now the macro trend, going back to this chart, the resistance, first resistance comes in here, if you want to look at this, at the Fibonacci 786% retracement, which will be at approximately 1381.5. So right about in here. So we're very close to this first resistance zone, which basically comes in at the top of the market where it was in 2011, right around the end of July. So this Fibonacci takes the contract high back in 08 to the contract low back in 09 and draws these retracement levels. So we're getting back up here to the 786, and a lot of times these Fibonacci zones, they form some pretty good resistance the first time up. So keep an eye on this, the 1380, 1378, 1381 level, and then after that there's really no major resistance until you get to the next resistance zone is about 14. It comes in at 1435, right in here. So I would imagine, just based on technicals and support resistance, that you will usually test it one time, pull back, and then it'll take another time up. So keep an eye on that area. Now the next major asset class is the 10-year Treasury note. This is U.S. 10-year Treasury note. So the current trend is up on the macro. You can see here it went basically back long back in May 2011. It's still up, and actually the long-term trend is down. It's cycled down. It's back up, but it's still down. It has not turned up. It's close to turning back up. And so I wanted to show you this. So the macro trend's up. The long-term trend is down. So you've got kind of a cross current going here, but the macro trend is up, and watching this is very close to going long again on the 10-year Treasury note. Now here's the gold, which is another major asset class. The macro trend turned down back in the end of November 2011. Had this big move down. It's still holding down, but the longer term trend is up. So the longer term trend turned up back in January, the first week in January 2012. So this is for gold. So the long-term trend is up. But you can see here on gold, here's where the long-term trend, the system went short, the system went long, the system went short. Now here's crude oil, which is another major asset class, energy. So here, just going through the macro trend, the current macro trend is up. It went long right in here back in November 2011. And the long-term trend is up. It went long again back in February, current month we're in now. And looking back at the signals, here's the macro trend. It turned down in July 2011. It turned back up in May 09. It had caught this huge move down back at end of August 08. And then you can see these various signals here on the long-term trend. Long-term trend up in October, went back down in January of 2012, and now it's back up. So that's crude oil. And this is real estate. This is a CBOE, the DJRIX, which is a real estate REIT index. But the macro trend is down. It turned back down end of August 2011. Before that, it went back up. The macro trend went to the upside in June of 09. Had this huge move, pretty much similar to the stock market. The current long-term trend, however, is back up. It went back up in October 2011, very, very much in line with the equity markets. So just wanted to point out these longer-term macro trends and long-term trends across 5 different asset classes. And this doesn't even take into account what we do for swing trades or intraday day trading using the same model. So hope you get something out of this video. And then there's one last chart I want to show you that's pretty interesting to keep an eye on, just for the overall picture of where the markets may be headed and to help you in your trading. Now this is a chart of the SPY, SPDR, which is the ETF for the S&P 500. And then that's on the top, and then you have, this is the transport, the Dow Jones Industrial Transport, which is the ETF is IYT, and then the Russell 2000 Index, which is an ETF for the Russell 2000 IWM. So this particular chart setup is showing this. There's currently some divergence going on in the marketplace. So I wanted to point this out. Keep an eye on it. We're still in a strong uptrend. You can see this trend line is just incredible. The SPY has been hugging this trend line since back in December. This red line is a 10-period moving average, simple moving average. So it's just been trending, grinding higher, higher, higher. Has not broke down yet. But the thing to be aware of is just keep an eye on the IYT, which is the Dow Jones Transport. It actually has been off about 9% from its 52-week high, which came right about here 1st of February. So it's rolled over and it's come off about 9%. The S&P is still going up. The transport's going down. The Russell 2000 right here stalled out and made a high back in February, the February 17th, and since then it's come off about 5%. Today it had a big day. So we may be seeing some support here. It actually held right here on the IYT at about the 50-day moving average. So if this holds and starts moving back up, this will push the trend higher on the SPY, or the S&P 500. However, if this starts rolling over, this will eventually drag the S&P 500 back down, and all the pretty much the equity market. So keep an eye on the IYT and the IWM, the Russell and the transports. The transport theory behind this is if transportation shows a slowdown, then that's a sign that demand is slowing in the U.S., and that's a lot of people will focus on this. So keep an eye on it. Good luck trading, and hope to see you at optionsontheopen.com. Optionsontheopen.com. Thank you for your time.